Hey there, it's Mitch Goldberg. It's time for Be the Boss of Your Money. Welcome to the show. It's about personal finance, it's about investing. We share a lot of knowledge here because we like to see you make the best possible financial decision for your situation. We don't sell stuff here in this show. We talk to you, we share knowledge. And if you're interested in speaking with myself and my partner, Bobby, you can reach out to us. We are financial advisors with decades of experience, decades to go. We love what we do. We love helping you. And sometimes a 10 or 15-minute conversation with us could do you a world of good. We are financial advisors. Client first strategy is the place to go for our contact information. You can Google us, connect with us on LinkedIn, Instagram, Facebook, YouTube. We're all over. And if you're watching this from YouTube, please like and subscribe. I'd really appreciate that. So let's get into it. Stock market hits a new high. That's worth celebrating, right? We had a couple of down days in a row. People are, all it takes is 2 or 3 days of a down market and people start to get upset. But the market could go up one day and people get excited. They get upset, they get excited. Market's been on quite a tear. Last year was a good year. We are just about done, right? Friday is the last business day of the quarter. So, and Friday is Good Friday. So we are done with the quarter and the major averages are looking pretty strong. Stocks are looking pretty good. The rally is broadening out to include more sectors. By the way, today, the leading sectors were utilities and real estate. So broadening out. Let's do a quick roll of an intro. We'll talk about the S&P 500, what the deal is with interest rates, and the question that you want answered, could this rally continue? Did you miss it? Should you chase it? Should you hang on to what you have? And if you're a new investor, what do you make of this? Here we go. All right. Thank you so much for joining me. While you're watching, if you have any questions, please ask me in the comments. If you're watching this in the live stream or in the replay, it's on my timeline. You'll get an alert, a notification that we went live, so you can check us out throughout the night and watch, enjoy, learn, ask questions in the comments. I will see those. I will get back to you. If you don't mind, give me a thumbs up or some other reaction. It'll help the rest of your contacts see the show and they get to learn some important stuff as well. It's all fun. It helps the cause, right? It just helps the cause. So what we're going to do now is we're going to talk about the market. I'll put up my screen. We do have a comment out there. We have our first thumbs up of the day from Linda. Hi, Linda. Okay, Linda's out there. Thank you. So just a quick point I want to make for everybody. Thank you, sweetie. I found a really nice sized piece of cardboard. Like, see this? Bite-sized piece of cardboard. We got an LOL. LOL to you. All right, LOL. Thank you. So what do I do with this cardboard? I need to make like a new sign, maybe like something, a little sign, just to drive around. I'll have somebody take a picture of me while I'm driving my car on Route 110. It'll be a little dangerous, but well worth it. Don't you think it'll be worth it? Yeah, I do too. Okay, so stocks are up. We have people watching from LinkedIn. We have people watching from YouTube. And we have people watching from Facebook. All right, that's good. That's a good thing. I appreciate all the support, all the love. Stocks hit a new high. Investors have been too negative for so long. Stock like GE hit today 185, up like $5 or $6 today. This stock was in articles 2 weeks ago of how it's overbought. It's one of the most overbought stocks on the exchange. And here it is, setting another new all-time high. Even NVIDIA, which backed off today, still over $900 a share. It's good to see the market go up when NVIDIA goes down. I'll show you some of the big tech stocks that went down today. So if anybody says it was all technology, no, it was really all industrials. So we'll take a look at that. Let's take a look at what drove the market today. We'll learn something. Let's just do a quick share. All right, that's better. Okay. So the Dow up almost 500. We'll call it almost 480. 500 is a little bit of a stretch, but up almost 480. NASDAQ up only 0.5%, up 83 points. But you see that? The Dow Jones Industrial Average is up over 1.2%. It more than doubled the percentage gain of the NASDAQ today. And the S&P was up a respectable 0.86%. Gold up a wee bit. Oil continues to go up. By the way, one of the reasons the market's going up is because of oil, because oil stocks are doing well. The 10-year yield, though, is down to 4.18%. So for those who are saying oil going up is inflationary, yes, it is. But is it a matter of inflationary with too many dollars? Or is it a matter of just supply and demand metrics because other things are going down while oil goes up? But oil still closed at 81 and change a barrel. The VIX is down to 12.78, under 13 on the VIX. Pretty confident investors out there. Okay. Let's take a look at some of the big tech stocks. So Apple is up a little bit. Tesla, I'm not really overly concerned now with Tesla, but let's see. Amazon was up a little bit. Well, Amazon's not too far from its all-time high. Google is just almost at its high. Microsoft trading great. Meta, it's backing off a little bit, but still pretty good year. NVIDIA off, 902 to 974. It's high. So it's like a stock $9.70 to $9.02. It's a little bit of a knock, but nothing terrible. It's up a lot this year. Netflix has been doing quite well. And let's take a look what else drove stocks. If you want to know what my watch list is, all the stocks that I watch, you can just check this out. These are not necessarily buy or sell recommendations. These are just the stocks that I follow. This is my dashboard. I have stocks, I have commodities, I have exchange traded funds. But look at that. GE up over $6, up almost 4% to 180, new high. Wabash, you don't really know Wabash. They make trailers for trucks. John Deere starting back up above 400. But look at this. Oshkosh, American Airlines up 2.5%. UPS, a little bit of a rebound from yesterday's drop. Lockheed Martin's been doing pretty good. Boeing, finally, they got rid of their CEO. It's like their planes, just monster, major quality issues of major aircraft. It's a real frightening thing. So hopefully the management team could get in there and fix all that stuff. Caterpillar up 2%. United Rentals up 2%. All of these things, what the message in the market is telling you is that the market's strong. The economy is strong. Industrial stocks going up like this, it's telling you something. There's always a message in the market. Industrials are doing well. Utilities are up over 2% today. A lot of demand for energy. Don't expect inflation is going to bring us back to 2019 prices. We are in the process of a massive industrial boom in this country right now and a huge spend on infrastructure. Don't expect employment to plunge. Don't expect the unemployment rate to skyrocket. And as far as the Fed raising rates, big deal. We got over it. We got past it. Interest rates are on the way down. The stock market didn't do so bad. Well, obviously didn't do so bad. We're at all-time highs now. Individual stocks in other sectors besides large cap tech are doing very well. This is an enlightened time, and we have plenty of energy. Oil goes up and goes down. It fluctuates. I know there's somebody out there who's going to say, oh, it's over 81. That's it. That's it. No, there's no such thing as that's it. There's no one little thing that pushes a button and then everything falls apart. Just face it. We're in a good, strong uptrend in the stock market that's very durable. The economy is doing pretty good. I understand not every single part of the economy is booming. I understand that as plentiful as jobs are, they're not all great jobs. Someone's going to say, but what about immigration? Okay, it's definitely a knock, not killing the economy. Someone said to me, well, each immigrant gets $15,000 cash and they take over an army barrack. People are saying the dumbest things to me. I don't know where people are getting this information from. I'm not saying it's not an issue, but we do have an immigration problem, and it's not a problem because it's too much. It's a problem because it's not done right. But we need immigration because we need population growth. And any major economy that faces population shrinkage shrinks. That's not a good thing. So people have the scarcity mentality that if more people come in who aren't exactly like us, then there's going to be no country for us. It's a shame that people are afraid of that. It's not going to be the case. Okay. And as long as a bad day in America is still better than a good day almost anywhere else in the world, people are going to come here. But let's do it right. Okay, that's my 2 cents. So what can we expect from the market, and what should do investors think? All right. You have to go by your own personal finance. And to me, personal finance, what you have to do should not be dictated by the stock market. I was with a wonderful, beautiful couple today. Good friends. They've done extraordinarily well for themselves. So smart. Just if you want to talk about people where every move they made was the right move, just and humble, very, very humble. And they're getting close to that point. Retirement is very close. They could see it. They can afford it. They can see it. But a lot of it is dependent on how the stock market does. And I don't like to just openly disagree, but I said, it shouldn't really matter so much. Well, how could you say that? Most of our money's tied up in the stock market. And I'm like, whoa. First of all, as you age, you have less money in the market. But when people want to retire young, especially, let's say, low 60s, their risk is not the stock market going down. Their risk is longevity, because you could live 30 years. You could potentially be retired longer than you were working. So you're asking a lot of your money to keep you going, living in style. But the market, I promise them, will have a big drop between now and the next 30 years. I think that's a fair promise. I think it's a fair promise to say it'll happen several times. If you want to retire, it shouldn't be determined based on how the stock market does. We expect the stock market will continue to grind higher over time. Sometimes it'll go up in a big leap. Sometimes it'll grind and just do nothing for a long time. Sometimes it'll go down. But the trend remains higher. Over time, markets go higher, economies grow over time, unless you have a shrinking population. That is a story for another day. So it's not so much determine how the market does. They're diversified. By the way, diversification is a strategy that we use to mitigate risk, but it doesn't necessarily protect your portfolio from going down in a generally down market. So what I want to say is there comes a point when you have to take that leap. And, well, if the market goes up, we'll retire sooner. What if you retire sooner because the market goes up and you have another year 2000 or year 2008 like stock market? Does that mean you made the wrong decision? So what I'm saying is your personal finance will dictate how much cash you have in your portfolio to live on when you head into retirement. And I say live on because in the first few years of retirement, it's actually the worst time to take money out of your portfolio, especially if the market goes down, because you face something called negative sequence of events. So these are the kinds of things that we go over. Your personal finance is a lot more than just the stock market. Your personal finance is a lot more than just a financial plan. I make financial plans for clients all the time, and some of these documents are over 100 pages long. I can tell you for sure, without understanding personal finance, a nice, smart, sophisticated financial plan, it won't sink in. It's a waste of everybody's time. I'm not saying financial planning is bad. Planning long term is important, but your personal finance has to start first. That's all I'm saying. So don't make buy and sell decisions. Don't make retirement decisions based on the stock market. Make it based on your personal finance. If I'm a new investor and the stock market's up a lot, what do? I had this conversation yesterday with a new client and a young client. And she started out with a nice amount of savings for the market. Just she took a deep breath. She had a deep breath moment. I don't know. Should we do this? We looked back. We looked at different scenarios, ups, downs. I didn't have to resell the plan or the work I put into it. I know it's good. What are we going to do if the market goes down? What do we do if the market goes up? How much has she set aside in cash and CDs? And when you look at everything together, it's a smaller portion in the market. It's very diversified. And we really have to give this time. And there is no assurance that the stock market will be higher in 5 or 10 years. It's a deeply held expectation, but it's not a guarantee. And there have been 10-year periods where stocks were down or flat. So it's not a guarantee. This is, by the way, where reinvesting dividends and interest comes in handy, because at least you're compounding. You're putting more money into your investments automatically. So when the market does come up, it finally goes up, you have more shares working for you. And you could really compound your returns that way. So a new investor, I'm telling you right now, if, as Warren Buffett said, if you think the market is expensive now, just wait until you see how expensive it gets in 20 years. This is your starting point. And when your parents started and when I started investing, the stock market was expensive. It was high. It was at an all-time high. And people didn't want to invest because it was up too much. The P ratios weren't low enough. Stocks weren't at their year low. The dividends, they weren't high enough. And look where we are now. And people, I expect, will be saying the same thing in 20 years. This is a great market, new highs for people who are already invested in the market. This is great for my clients who are like 45 plus, especially those who are 65 plus, because their portfolios are pretty much across the board worth millions. So they're already in it. So they're loving this. And to them, they're going to start some of them are already distributing money from the market, not contributing money to the market. But it's a different ballgame for a new investor. A new investor should enjoy a good market crash, because my clients now who have a lot of money in the market, they've all trudged through the down markets, and the buys that they made during the down markets were actually very helpful. But they're not the only reason why they're up in the market. They didn't sit around waiting for the market to go down one day and then they're just going to magically invest all their money at some great bottom, some great opportunity, and they're going to make all this money. Most of my clients, when they invest, the market was high. It was too high, according to many experts. And I say, when you're listening to the experts, the best thing to do is this. I always do this, right? Put your fingers in your ears and block it all out, because what everyone is saying is probably useless. You're not going to remember in a week, and the scenario is going to change. This is why we say personal finance, an emergency fund, insurance for those emergencies that exceed the value of your emergency fund. Then you have savings for known expenses, and then you invest the rest. What do you invest in? You can invest in stocks. You can invest in packaged stocks like exchange traded funds and mutual funds. You can invest in houses, in art, whatever floats your boat. There's no right or wrong. It's what makes sense for you. Most people don't have the expertise to invest in individual pieces of real estate or art. So it's a dicey game for most people. Maybe red wine, white wine, I don't know. But if it floats your boat, enjoy it. Now, if it's not your thing, but you enjoy it, just don't invest too much into it. Be smart about it. That's all. I hope you'll reach out. I can be found at clientfirststrategy.com. Until then, till tomorrow, I hope you have a good night. And I look forward to seeing your questions.